Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DX Trade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too. So for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, onto the show.
All right, good morning, guys. Welcome back to another live stream. Got a big one here for us today, guys. We've got PMI numbers. It is the services PMI number. We saw a big reaction, by the way. 2 PMIs yesterday. Let me fix my camera angle. There we go. Not yesterday. Last week, we saw a big reaction to the manufacturing PMI numbers. I'm very curious to see if we get something similar here today. So I'm going to pull up Forex Factor really quick. And let me adjust my selection. I want to do all currencies. So today we have, again, like I mentioned, we have the ISM Services PMI number. And this is a big number. Manufacturing last week really disappointed. The number came out lower than expected. And remember, as we talk about often, the PMI number is the Purchasing Managers Index, and it's a really, really useful indicator. In fact, it's one of my favorite ways to watch economic growth or lack thereof, because what this is basically doing, and excuse my voice here this morning. I've got a cough drop in. I don't know if anybody else gets allergies from tree pollen, but I took a run this weekend, and it was like right after. I was outside for a couple hours, did a run, came inside, and it was like right away, the pollen hit me. So I don't know if anybody else gets super impacted by pollen, but it is pollen season and allergies are coming in hot. So everybody out there who does not yet feel allergies, be careful out there. Stay away from trees. But anyways, the services PMI number, again, what we're looking here for, the reason I like this indicator quite a bit, not this indicator, this economic data as an indicator, is because services PMI, basically what it does is it goes and surveys a bunch of purchasing managers in the services sector. And so if it asks a bunch of people, hey, are you looking to hire? Hey, are you guys loading up on inventory right now? Are you anticipating good times ahead? It's a lead indicator. For example, if you asked me about A1 trading, I've got my hands all in A1 trading. I know what we're up to, right? Obviously, I do this day in, day out. So I could tell you a lot about what I do and what things look like ahead. But this case, we can go ahead and ask with the PMI number. We can get a survey from many, many people in the services sector. And so if we get a read from all of them, hey, do things look good? Do things look bad? That indicator is forward looking. It's why it's a lead indicator. People love to talk about, indicators are lagging, or, what fundamentals, why I love fundamentals is they are leading. If you know what you're doing with fundamentals, the number one reason they actually are super valuable is because they are lead indicators, not lagging ones. Anyways, the services PMI number, we're going to watch that here together. We've got, about 35 minutes to go until then. So in the meantime, let's just do a quick pulse check on the market. Let me switch over to my pen color here that we can all see. Okay, so, and let me also switch to full screen. So let's go through this really quick. S&P 500 is down. The NASDAQ is down. The Dow is down. It seems like stocks are a little bit worried about going into this number, and perhaps some people are taking some profits, taking some money off the table ahead of PMI. And not to mention, guys, we have more than just PMI numbers this week. We have several key metrics. We have NFP on Friday and Jerome Powell speaking on Wednesday and Thursday up on Capitol Hill. So the point being there, it's a very volatile week. And so I find it interesting that ahead of some of that news, stock market participants are selling some shares. Anyways, the dollar index is giving back some gains as well, perhaps anticipating that ISM services PMI could be weak. Again, we saw weakness last Friday with the manufacturing sector. Are we going to see the same in services? So again, we'll be reacting to that in terms of for the currency traders out there. The euro is trading lower. The pound is trying to break out here, at least on the hourly chart. And gold, man, gold is being sweet to me right now. I do have a long position on gold and oil. I have to talk to you guys about oil. Had a weird thing happen here this morning, and I'm going to show it to you in just a second. If you are a VIP member in the room, I have to show you something really quick. So I'm still in the trade, even though it trailed me out on my CFD Mimic account. So let me show you what I mean. So US oil, it technically hit my stop loss. So I'm just being clear here. It hit my stop loss in terms of where I had my CFD, futures version. The issue though is I'm still in the trade. Wow. Okay. Ad block. Do you mind? So USO, I'm still in the trade. So it's kind of this weird situation where why are you still in the trade? Well, it's because ETFs and stocks, the stock market is not yet open. So my pending order here did not get filled, which in this case ended up being a good thing. So I'm actually going to I'm going to stay in the trade because again, my trade is still in, so I don't want to just close it if it's bouncing so hard. But I need to mark that up here within the group. And again, this happens every once in a while. It's kind of frustrating. It's the inconvenience of being, a US trader where I can't trade, I can't trade CFDs. I could trade futures, but I've just always loved ETFs. So anyways, the point is I'm still in my oil trade, even though it technically hit the CFD version of my stop loss. Hopefully that makes sense. It's a little bit confusing, I know, but I need to figure out what I'm going to do with that position. At the same time, gold, we are clearly still in. Gold is rapidly accelerating to the upside, and I absolutely love seeing this. I was listening to something here this morning that kind of a conversation amongst some of the CNBC guys and girls, and they were talking about Bitcoin and how there's perhaps a sympathy move with gold and Bitcoin right now. I don't know. What do you guys think? Do you think Bitcoin and gold moving together? I mean, we could put these guys side by side for a second, and I'll ask you guys, do you think, put it on daily, put it on the daily. These are both daily charts. I'm long on both of these, by the way. I'm long on Bitcoin. I'm long on gold. Both of them were running hot. So do you guys think is this correlation or is this just coincidence? Something to think about, right? Big pop here on Bitcoin, big pop on gold as well. And we mentioned this yesterday. I want to show you this, guys. If you're somebody who's watching gold, be really careful out there because most people are shorting it. Most people are betting against the run up on gold. And when I say most people, what I'm talking about is the retail positioning that we track on the Edge Finder. So we connect to various brokers that publish their client positioning. And we take a look at what retail traders are doing. And oftentimes we actually use it as a contrarian signal. So the contrarian signal right now on gold is actually to stay bullish. And so I am long gold. I'll show you guys my trade here. And let me just pull that up. So here's GLD. And GLD just keeps going, man. It's been a monster trade. And this stuff came out of nowhere, really. The commodities world just blew up. I was bullish, but I had no idea that it would do so much. This is why, by the way, when you see me talking about, I don't use a take profit. These events, this is why I don't use a take profit. You'll never see me in my traditional momentum style strategy I don't use take profits because the market can go so much further than any of us think, right? If you had said to me a couple weeks back, yeah, Bitcoin's probably going to go up 20% in the next few weeks, I would have said, no way. But markets do crazy stuff, right, sometimes. And so for me, I don't like to cap wins. I like to try and let winners run. I do have strategies where I do cap wins with my option selling strategy, but for my momentum style of trading, I typically let winners run as much as possible. Why buying GLD and not buying the CFD? As a US trader, I cannot touch CFDs. They are illegal in the United States to trade on a regulated broker. So, and I trade exclusively with regulated brokerages. So I have an ETF, GLD long. It moves in the same way as gold. You know, the percentages are the same. It's just adjusting to an ETF instead. Anyways, we got a lot of stuff to talk about here today, guys. The stock market coming down while gold and Bitcoin are rallying. Kind of a creepy setup there when you get stocks selling and Bitcoin and gold rallying. So yeah. Anyways, when it comes to the S&P, am I going to buy this pullback? I personally am not. In fact, let me double check though. I don't think we're getting bullish setups on the S&P. Yeah, we're not quite bullish S&P on the Edge Finder. If it was bullish here, I might consider it. But I just don't love the trade. I'm going to wait for a deeper pullback on the indices. And if we get it, then great. And if we don't, then, I'm trading other things. I'm doing quite well with gold and oil right now. So I'm just waiting on the sidelines with the indices. My thought process with them is I would love to be a buyer, but I'd like to see a corrective move on the daily chart. I mean, this thing does not go up like this forever. And so if you think, hey, this is just, it's just going to keep doing that, it could. But again, I think a lot of people get very, very confident in these kinds of moves that this is just how index trading goes. And it's very easy. You just buy every pullback. And while I do love to be long indices, I do think that there's you don't want to be the last one to join a trend. You want to be calculated. You want to be, patient. And so I am looking for a deeper retracement when it comes to the indices. Hi, Nick. How does the Edge Finder generate contrarian signals? Is it a retail versus net position? Yeah, good question. So what the Edge Finder does is if you're talking about retail positioning, the algorithm that is under the hood with this thing, in terms of this category, this is one category that the Edge Finder considers out of several. What it will do is we'll take a look at gold, for example. If this number is over 60, meaning retail traders are very bearish overall, 60% plus bearish or 60% plus bullish, those generate contrarian signals or a +1 or -1 on the Edge Finder's algorithm output. So I'll show you this really quick. So gold is currently very short biased. That's going to give us a +1 read on this category on gold's Edge Finder, on the Edge Finder's output for gold. Does that make sense? Type yes in the chat if that makes sense really quick on the Edge Finder, and I'll show you. You can always check your kind of thought process there. Just go to the top setups window, go to gold here, retail positioning, and there is our +1, right? So that's how the Edge Finder is thinking through all of this data. It does this automatically day in, day out, so that by the time I sit down at my desk, I have a couple things to look at. I keep my analysis list short, and then I can basically just go trade the things that I want to trade. If that made sense, just type yes in the chat for me. Do me that favor. It does help a lot. Okay, so I need to. Sorry for the crunching. I've got a cough drop. I mentioned this as we got on today, but man, allergies are getting me. Went for a run this weekend. Tree pollen just nailed me. It was like, also they say, my wife disagrees with me on this, but I think there is something. I am not a doctor. I'm not a scientist, and I'm pretty dumb in this area. But I think that if you run a lot, like if you really exert a lot of energy, I ran 12 miles on Sunday. My wife and I were prepping for a marathon, which up to the 26 total. Anyways, we did 12, and it's exhausting. And so I also looked up that post a big run like that, or post a very exercise heavy period, your immune system levels drop. And so I wonder if maybe there's that in combination with being outside for 2 or 3 hours, that pollen, the tree pollen. So I'm diagnosing myself as if I know anything, but I do not. So how old are you? Personal question. I am 14. I'm just kidding. No, I'm 27. 27 years young. Thankful for every day, man. Anyways, I need to justify my situation here with this. This is frustrating with oil. And this is, again, kind of the irritating sometimes. I am still in this trade. So let me just do this really quick. So for those of you who are in the VIP room, I'm going to just do a quick update on my oil position. I am still in my oil trade due to stock market not being open at the time my stop order was hit. My stop loss, I am adjusting my stop loss below the lows. So I need to also just adjust this. So I'm going to put my stop loss. I'm just going to tweak this slightly. USO, same concept. So I'm going to put this below this low here that we just made. Okay, adjusted that. So I am technically actually adding risk to the trade, but this rejection wick, it kind of, sometimes this works in my favor, other times it does not. So the way ETFs work is they open up at 9:30 a.m. Eastern. So my trade technically hit stop loss in the pre-market or before the market opened up. So I sometimes, though, the market keeps going lower and actually get filled at a worse price. It's kind of a disadvantage of trading ETFs, but it happens very rarely. And sometimes it works in my favor. Sometimes it works against me. I could have gone in there and manually punched in my orders and tried to get it in the pre-market close, but I was on the way to work. So it happens like this. Sometimes it's the messy part of trying to share all of my trades. It's not perfect business, but let me go ahead and adjust my stop loss. Okay, so I am going to, I need to adjust my oil trade. I'm going to do side by side really quick. And again, depending on services PMI, it's very likely that we still could get stopped out of this trade here this morning. So I acknowledge that, but I don't close pre-news. I oftentimes will hold trades through news. I'm more of a swing trader than I am any sort of day trader. So do you think we can catch another entry on oil? Maybe if it retests this area. I like this zone and I like the way this wicked off. But yeah, hold on. I just need to focus here for 1 second. So I'm going to adjust my stop loss. Stop is moved on my ETF variation of USO to 72.79. My stop loss on US oil itself, I'm going to adjust to 77.46, 77.46. And okay. Gosh, guys. Last night, it was like allergy AG double hockey sticks. I woke up at 2. I worked until 4. I felt like I was like some sort of, I don't know, Jeff Bezos in his prime moment. I'm just kidding. I'm not as jacked as Jeff Bezos, but I woke up like middle of the night. I could not sleep. My congestion. I was like, dude, this pollen just stinks. Re-entering on the CFD side with this adjusted stop below market lows this morning. Okay. All right. So there it is. Again, not clean, not pretty here this morning. And I honestly hate when this happens because it's two different markets, right? So I'm trading the stock market and I'm also trading the ETF. I'm sorry, not the ETF, the CFD variation. I track both for people who are inside of the group who they're not in the US, they don't trade US stocks. So I am trading technically USOs where the trade is placed, but I track the trade as well on the CFD variation. Anyways, let's get back on subject. So oil is I like this rejection off the lows. I actually think we have room to the upside from here, as long as, and this is the key here this morning, guys, I'm fine with oil, but I may close if this services PMI number is abysmal, then I'll keep my gold trade long. I wouldn't mind. I'm actually kind of okay with either way that the news comes out. If the news comes out showing weak PMI numbers, gold probably keeps going, right? Cooling economy stuff is usually good for gold because it shows, hey, the economy's cooling and inflation is a struggle. That's kind of a creepy scenario, and gold does very well. It's like the creepy old guy that lives above you, right? Like that's what gold is when it comes to looking at uncertain. It's like that guy who like is always kind of praying for everyone's downfall. That's like what gold is in the market world, right? You got like gold sitting, like stock markets are rallying. Those are like your optimists. Those are like your very positive people, like love stocks and then you got gold guys that are bullish on gold, right? I feel like there are more. I hate to just say pessimistic crowd because I feel like that's just overly simplifying the label. But at the very, very basic, they're very careful, right? People who are very, very bullish gold and they hold a huge amount of gold in their portfolio, they're very like concerned about a fallout scenario. And let me be very clear, I'm not talking badly about those people. I think it's very prudent to keep gold and stable sort of things in your portfolio, because what many traders here have never experienced, and it drives me up the wall when I see this stuff, when people are just like, Bitcoin fanatics and stock market bulls, like to no end, and they've never experienced when those things are horrendous to have. It's very frustrating because they're like, Bitcoin to the moon. And I should say, it's frustrating because I'm not like just bitter that, oh, hey, they're enjoying more gains. The other side of it is it's frustrating to hear that because it becomes tempting in your mind when, if you actually understand these things, and people who are incredibly bullish, leveraged stocks, leveraged, tech names, leveraged crypto, they haven't, many of them have not experienced what a true stock market fallout looks like. We got a dose of it in 2022, down 35% on the NASDAQ. That's pretty aggressive. But there are times in history where the NASDAQ has gone down 50% plus. And there's times, obviously, with cryptocurrency where it's gone down 90% plus. And so, yes, have you held it all the way through, you would have done great. But yeah, you had to be careful. Tim says my friends are like that. Tim, and for anybody else, some of my high school buddies, and I, they know I'm messing with this if this was ever to get sent to them, but they all had a Discord channel where they were all trading GameStop and going to quit their jobs and all that sort of stuff. And it was for fun. I think a lot of them were sort of kidding, but also sort of not, right? Everybody gets so caught up in the hype. Be careful with crypto. You guys see, I have a position on crypto. I have Bitcoin, but I'm not buying it up here. I have an IBIT position. I also have Coinbase crypto. I've got, well, I think it was like maybe 10 or 15. No, it was less than that. I think I'm in crypto. I have about $10,000 in the Coinbase account that I have. It's gone to 22. So I'm sitting there. I'm like, what do I do with this? Do I sell it? Do I buy it? What creeps me out about Bitcoin, and I think I need to take some out of my Coinbase account now that I'm saying this, you should not be heavily invested in something that you don't rigidly understand, right? Whether it's trading, investing, whatever, you should very much understand what you're invested in. Look at that, guys. NASDAQ down 1%. hitting support. Question is, are we going to hold support as we creep closer to that services PMI number here this morning? Stocks just can't fall drastically when this dollar keeps being devalued. Kyle, that's a good point, but here's something to think about with stocks, okay? Stocks, if you think they can't fall, you have a couple components. You are actually right. Inflation over time, as long as it's kept in check, 10% inflation, stock market's not going higher. It's going to collapse because people are going to get destroyed on the retail and consumer level. Why? Because point number 2, GDP and growth, biz growth. If you want to talk about, hey, can stock market growth continue? You have to have both of these, at least in what's the phrase? Keynesian economics, Western philosophy economics, a healthy level of inflation. But you also need business growth. Business growth does not come if inflation is massive, right? And it sustains itself at high levels. If you have high interest rates, high inflation, that environment is not nearly as suitable to growth as a lower level of inflation. That's why right now growth stocks are doing remarkable, right? Inflation is relatively low in the last, well, incredibly low in the last 2 decades. And that's given a bias towards things like the NASDAQ. But remember, these things can get crushed as well when that story is no longer the case. When you lose this, if you lose this, guys, if the economy, and we're getting prints for this in 10 minutes, services PMI is this, right? Business growth and business performance, by the way, there's a direct, and by the way, business growth is another way of saying earnings, company earnings. Company earnings do not grow if the economy is really hurting. So there is a correlation. There is some level of similarities between the economy and the stock market, but it's not perfect because they lag one another. Oftentimes the stock market actually leads the economy. So kind of interesting. Anyways, NASDAQ pulling down to support. I mean, we are looking at a 1% drop here before PMI numbers. I'm going to tell you right now, guys, we likely, with this PMI number, we're likely going to see NASDAQ either break this pretty decisively, and we might actually start to see this downtrend continue, or if this snaps back, wouldn't be surprised to see a pushback through the highs. Just transparently, be very careful looking at the NASDAQ right now. A lot of people are going to buy this thinking that, the NASDAQ's been on a tear, it's going to keep going up. It could, but be careful. I'm saying this over and over and over on all my socials. People who are getting locked in thinking that the NASDAQ is just this easy to trade vehicle, just be careful, okay? Gold is flying, and this is signaling something also. Gold keeps going higher, and the stock market's near all-time highs. Got to be careful with that. Is there something coming on the horizon? This is why I'm personally positioned heavily in commodities right now. You guys who watch me know, regular viewers, these 3, I've got positions in each one. And I've got Bitcoin, which again, really small position, kind of a more for fun trade, but not actually for fun. I mean, I want to come back to Bitcoin. Let's talk about our commodities setup. I've got a stop loss trailed. I'll show you the daily chart. This is where I'm at with gold. If gold comes down, it should hold this level. If it does not, profits are going to be taken. Okay, so I'm holding on to my gold position, which, by the way, full credit to the Edge Finder. Edge Finder got me into the big to the gold trade here, 100%. It also got me into the oil trade. Now, the Edge Finder, I want to say this really quick. The Edge Finder is not a holy grail system. It's not going to do your homework for you, but it's going to certainly help. It's like Chegg. You guys know Chegg? Also, how's the Chegg stock doing? I got to check that because, man, in college, anybody else use Chegg a lot? My goodness, my now wife, this is why she became my wife. Single-handedly, she became my wife because she had a Chegg account and she let me use it. And it was so game changer to have a Chegg account. But look at the stock, man. This stock was a monster stock when I was in college. Look what happened to that thing. So all throughout, college, it was just going straight up. Anyways, not a Chegg stream. Do I buy Chegg here? I don't even know because I don't know what the earnings or anything look like. But let's stay on topic. The Edge Finder is like your Chegg. Okay, it doesn't do your homework for you, but it certainly helps. Okay. Tim says he never checked Chegg because he never did his homework. Tim, you are a brave man to never do your homework. How did you even get through school? And maybe you did get through school, and maybe you just turned to trading and you said, you know what, forget school, let's just trade. Which is valid. My last year in college, I had terrible grades because I was just absorbed in starting my my YouTube channel. I was trading years before that. Started doing the YouTube channel, and it was like goodbye school. I could not care less because it was just I loved making videos. I started to pick up some traction. My trading was going pretty well, and so, anyways. Full credit to the Edge Finder with this gold bullish signal. This has been a remarkable trade. Oil was bullish. It has recently given back that bullish read, but I'm still in the trade and trailing stops on it. So I just want to point out that the Edge Finder has been remarkably right with many of its trade setups here recently. I also do want to mention off the back of that, it's a perfect time to remind you guys that we're currently doing 25% off the Edge Finder. If you haven't already picked up a copy and you are watching this stream live with me right now, we've got an office here in Atlanta, Georgia. Some of my lovely team members here are in the office and standing by on the line. If you guys would like to get set up with a copy of the Edge Finder for 25% off, that sale is going on right now. It's ending soon. You get a quarter of the price slashed off if you send us a DM right now and let us know that you'd like a copy of the Edge Finder. Again, that sale, all you got to do to get access to that, just click this link. It's in the chat right now. If you're watching back at a later time, it should be linked in the description. So yeah, take advantage, shoot us a DM. The Edge Finder is absolutely game changer. I stand by it. We've used it for, almost 2 years now. We're coming up on our 2-year anniversary, and you guys should see our chat log. Internally, we have just constant updates, things we're working on, and Frank and I, we just love doing it every day. So, and I know many people love it too. You got to imagine it's very inspiring for us to just see so many people who are using the Edge Finder constantly to improve their trading, and then we're working to improve the Edge Finder to help them with getting more data. It's like a campaign for us that we are absolutely thrilled with. Anyways, guys, we are just about 6 minutes out here now from the services PMI. We've got Frank on the line. Real quick, I'm going to take just a quick break. We're going to come right back, talk to Frank about PMIs and what he's looking to trade going into this event. Coming in just after this. Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. And if you're an algo trader looking to get set up with a VPS, we've got an awesome discount for stream viewers. We can get you 30% off with code A1Trading30. The link for that will be dropped in the chat right now. If you're watching this stream at a later time, you can also find it linked in the description below. They have a 14-day money-back guarantee, so take advantage, check it out for yourself, and now back to the stream. All right, and shout out to Forex VPS for sponsoring us here, making these shows possible. I'm now back with Frank. How's it going, Frank?
Hey, I'm good. How are you?
Good. And Frank, I'm really curious to see what these PMI numbers come out. Services PMI comes out in just about 5 minutes. What are you watching going into that? And I guess, will it help you make any mind up about maybe indices or gold or commodities? Like, what are you looking for in this number?
Yeah, every news event like this is going to impact in some way. So higher PMI I think would be bad for gold. I think it would be good for the
Mhm.
indices. I think it would be good for the dollar. But the expectation is lower. And if we get that number that's lower, that just feeds more fuel to the overall stagflation idea that
Yep.
that I've been concerned about for, I guess, about a week after just looking at GDP, and inflation rates, and then if the labor number comes in lower, these are key signs that we are entering an environment of stagflation, and that's why gold is taking off, and yeah, and VIX being up today like 5%, the
Mm.
dollar still weaker on the day, indices coming down, and gold up. That's just the combination of these things is very telling. So if that
It certainly is
continues,
eerie seeing all those, as you mentioned, gold, the VIX up, and at the same time, indices down. And yeah, it's kind of creepy, Frank. And we might be on the cusp of something here. I don't think that that's kind of what the market is thinking, but look at gold. It's signaling, as you just mentioned, that we might have a creeping concern about stagflation, which for newer viewers, stagflation is the idea that inflation stays sticky and problematic, but at the same time, growth starts to slide and perhaps even jobs data comes out weak, which, Frank, we get that on Friday. So I don't know. We have a lot here. To think about when it comes to, and by the way, guys, stagflation, super ultra bullish for gold. That's like the sweet spot for gold, is when you have stubborn, tough inflation, but growth is sliding. And so people are like, oh gosh, we might be in for something big. Let's park it in gold, right?
right? Yeah, that's the concerning thing. Um, but gold is near its all-time highs at 2148, somewhere around there. So I think it's more likely to test that before it makes another decision. So if it breaks higher, or if it retraces, I think the next move is going to be determined after it tests that level. But
Mm,
PMI could come out higher than expected, or whatever, and then
yeah,
that could change gold to the downside. And we missed that
exactly.
completion. But yeah, I think gold right now is definitely at that. It's close to that decision point of where it's going to go, because the move has already happened. There might be a little bit left over, and then we'll have to see. But the way things are setting up now is kind of like investor sentiment, almost betting on a miss in NFP.
Yeah, no, I think you're onto something there. And again, we are just about a minute or so here before the PMI numbers come out. I've got our screen set up for everybody watching. What we've got is we've got our stock indices over here on the left. You got the dollar index front and center, euro, pound, gold, and oil. Whatever you personally trade, feel free to watch the screen. I like to just get it so we can see everything at once. And really interesting, Frank, seeing indices come down hard here. And I know, in terms of selling options for premium, I love when indices fall because then I can actually start selling some options again. So might be interesting to see if we get anything there. But got everything lined up. We'll see what this number brings us in about 30 seconds here.
I would like to see a beat in PMI. Um, that's just because I have a lot of my positions are more so stock heavy. So
Yep,
um,
fair enough. So we'll go ahead and do our quick breaking news here right now. All right, and there we are, just about 10 seconds out from, again, services PMI. Let's just stand by and see what kind of reaction we get in the markets.
I don't see anything yet.
All right, there goes. Look at the euro. The dollar just dropped hard. That might suggest cooling numbers, which, of course,
It is
interesting.
much cooler.
Where are we at, Frank?
52.6.
Whoo!
Yeah,
Wow, Frank, we
a
might
little
be on
concerning.
something with that gold stuff we've been talking about.
You're still in gold, right?
I am. I'm in gold and oil. No stock indices. Uh, Look at the dollar, man. I am in the dollar as well, so this is not great for my dollar position. taking out the lows here, it looks like. Look at euro and pound. Holy goodness, man.
Yeah.
That's a what is that? That's almost 30 pips on the euro. For those of you guys who watch EU and GU, those things are moving here this morning. Oil's holding its gains. Gold, look at that 2137. Frank, you might have called it with that retesting of the highs. We might be right up to test those highs here today if this number holds. But what a move, man.
Yeah. Again, it's kind of spelling out, what are we going to see on Friday? And it just looks like we're going to see a miss almost.
Yep. And again, I also want to highlight too something about the Edge Finder. These PMI misses should show up in the economic score. It's part of the reason why, you look at inflation, you look at the economy factor, interest rates, overall, the economic factors are kind of favoring continued bullishness for gold. It's giving us that sweet spot that we just communicated about, the stagflation idea, growth kind of struggling, inflation staying sticky, and interest rates maybe coming down as well. I mean, that is the gold sweet spot if there ever was one. And so again, and this is the thing, we've talked about gold. If you're going to get gold breaks to all-time highs, things have to align, and they actually seem to be forming an alignment. I guess, Frank, question for you, and then we got to bring Chris into the conversation as well. If you're looking at gold, and many people are, they're not in this move, how do you remain calculated, and what do you look for if you want to be long? What do you think? Like, how do you approach this?
I would just say there's probably two ways that I think are good, and it's wait for the move to complete up to 2148. Watch for a break there, and if there's a break that signals or could signal more momentum to the upside, or wait for that break to pull back to the new support line on all-time highs, or you wait for price to test this, and if it pulls back, wait for some more support lower. But this gap right here between the 2060s and the 2090s, that's like the clear levels of support I see. So that's a pretty steep drop from where it's at now. So this whole range, I guess, the last 3 days have been extremely volatile compared to the past month or so. We were looking at a range bound market, and we were questioning where it was going to go. So in my mind, I feel like if you're not in this trade, you got to be really patient with it. And I wouldn't try to hop on the train just yet.
Yep. Smart. And I'm with you. I think you got to remain prudent with this and just be patient. We'll ask Chris the same question in just a second. Before we do that, we're going to thank our sponsors here, Eightcap, on the stream. These streams, obviously, there's a cost associated with them. We make them free for people on YouTube, but there's a lot of time that goes into these things. So we're going to real quick thank Eightcap, our sponsor here on the show, and you can find out how you can get a free Edge Finder if you sign up with them and deposit a certain amount. So stick around, and then we'll be right back with Chris just after this.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys, we've got Chris now on the show. Hey, Chris, how's it going?
Happy Tuesday, fellas. Bitcoin chart alarm just went off. All-time highs, no big deal.
Is it at all-time highs? That's kind of a record moment.
Just in the last minute.
Did it really do that?
Just the breach. The November 2021 highs was 69,000 on the exact zeros, and so we just breached it. You can see we're pulling back, but what a run! Hey, check this out, Nick. Is that your chart or my chart? Doesn't matter.
Yes.
Look at. I looked at this last night. Who remembers the old Dogecoin?
Oh, this is the Doge King.
Look at this thing.
Chris, Frank traded that thing from like 6 cents up to like almost $1, whatever it went to. It was crazy.
Now, are you talking like this year to get this little
No,
chunk,
no.
chunk of one? Or are you talking back in the SNL days with Tesla and Elon Musk hosting?
Yeah, I had it in 2020 under like a penny, and it took it up to 70, and that was a cool ride, but I didn't realize all that profit anyways because I had diamond hands at the time.
I bet. I had a few friends that were, that's going to $1. It's going to. I'm like, dude, this SNL thing is going to be the weirdest timing. I'm like, I said the same thing in GameStop. I had friends in GameStop, and they're trading Robinhood. And look, I mean, you guys are traders, right? So when you have triple baggers, quadruple baggers, it's like that's not a usual thing. And the stuff that we saw in crypto in 2020 and 2021 into the highs, and even this is Shiba Inu up 350% in literally the last like 2 weeks. So
Crazy.
it's like Bitcoin traders are bored, I guess, and they're like, let's put it in the memes, the meme coins.
Yeah.
So
They're
it's
like
just
the
wild,
ultimate
man.
adrenaline junkies in the
Right?
market.
Something.
Sure.
This
Something,
is scary though. This is the scary part.
I agree. I mean, I'm shocked to see. So let's just look at the technicals here. If I've got my charts up, so let's check this chart where I've got my momentum oscillators, and we're sitting here, 197 million Dogecoin purchased on Robinhood. Doge hits 3-year highs. Bitcoin breaks above all-time highs. So we're making some history right now. Congratulations. I did find there's some pushback from the SEC on Ethereum spot ETFs from BlackRock. So that might be a little bit of soul crushing to so everyone that's like, oh, Bitcoin's got the ETFs. Now it's Ethereum's turn. If you look at Bitcoin versus Ethereum, the comparison has been, Bitcoin, it's been pretty even, honestly, but a bit of an outperformance by Bitcoin. And anyway, I just want to take a look. Same thing we've talked about before. This run is insane. And take a look at, this is relative strength. We're printed way up here at, 83. The highest that I've seen lately has been that big run in SMCI with the semiconductor space getting to like 95, 96 on the RSI, which is crazy. The last time we had this same type of reading goes back to when we tapped the highs here back in 2021. So we had the highs in February, highs again in October, November. We don't have divergence yet. That's the one thing I'm not seeing. So, relative strength still made a higher high. There's no divergence there on the oscillator. This is, again, the weekly time frame. But if you look at the daily chart, this is pretty interesting to me. We just poked the all-time highs, and this one we can see some divergence and overbought conditions. And there's a nice little pivot cluster back here around 59.6 and 56,000. So a pullback is needed. A pullback's expected. We opened softer today on the market, so the SPY's down a couple of bucks. The SPX yesterday I shorted with a bear call spread on the futures market, made a couple bucks there, which is great. But everything is a little bit softer. I'm gonna ask you guys a question. What do you guys think of, Apple being down and Google being down? Is this just a rotation, in your opinion, out of Mag 7 into crazy chasing, NVIDIAs and SMCIs and AMDs?
Frank, what do you think?
Would you like to own Apple, Chris?
Oh yeah, I'm doing like bull put spreads out of the money. I'm just letting Apple come to Papa. So I'll just buy it lower, do some credit spreads. Apple, I know so the news on the big drop is that the competition in China is heating up. They're down like 24% in sales as far as units in China. So that's a big deal. That being said, though, it's funny how Apple was kind of the safe haven stock for the entire S&P. It's the largest company in the S&P, and yet we're barely getting a break. Right, NVIDIA's made this massive charge. Meta's made this massive charge, just kind of keeping the market cap weighted up. But let's check the RSP for a second. This is equal weighted S&P.
Yep,
hasn't budged. So equal weighted,
Chris,
even S&P hasn't budged.
I want to paint a picture for you too. This is something else to think about.
Okay.
So here's something to think about with a couple charts to show you guys. First of all, you've got gold, and Chandler, if we could switch over to my screen for a second. So we've got gold flying high here today. Silver's even participating. At the same time, you've got the NASDAQ, as you mentioned, Chris. You've got Apple down. You got NASDAQ down, S&P down. What kind of is boggling here, and this is the real secret, to the whole thing. It's not actually a secret, but most traders don't pay attention to bonds. Yields. Yields are coming down here on today's number, PMI showing weakness. And this is something we've been saying. And Chris, I know you and I have had this conversation. Frank and I have had this conversation as well. The market has been calling like, we need rate cuts. We want rate cuts. This is what happens when you actually get evidence that you need rate cuts. The market doesn't actually like it, because guess what that comes with is, oh, wait, so inflation is not super easy coming down, but yields are coming down. So that combination really creeps out the stock market, gives way to the commodity side. So I just kind of think it's interesting, Chris. We're starting to see this pullback that we've been talking about seeing. I think there's a little bit more room to run to the downside. I'm not eager to jump in right away. But I don't know. What do you think, Frank, about is this going to signal, hey, we might actually need rate cuts at a point? And that's a different story than, hey, we could probably see some rate cuts this year. Is that two different stories? And I guess, what does that tell you about indices?
I do think we will need rate cuts at some point, but at the same time, I don't think they need to be anytime soon. If this is what you're asking, I'm not sure if I'm answering it correctly, but I do anticipate rate cuts, but the market had anticipated like way more than what was even talked about. The Fed mentioned that there could be one towards the back half, and then they said, it depends on the data, as they always say. And with this, I don't know. They'll need to cut rates, or they may be forced to if we're in this sort of situation where the economy continues to suffer. I mean, PMI that we saw today is still in an expansionary phase based on the survey. It's still above 50, but it's coming down. So I guess until we start seeing harsher numbers, if we start seeing below 50s, like into the 40s, and even if CPI keeps ticking higher, they may be forced to start cutting rates. But at that point, a rate cut would not necessarily be bullish either. I don't know if that would help the indices.
And that's the thing. That's the concern, is that, if that inflation number doesn't play ball alongside cooling economic data, you're in for probably a 5-10% pullback in the S&P and NAS. So I don't know. I'll leave that with you guys. You guys can take over the stream. Frank, you can stick around as long as you want, if you'd like. Chris, you're in the driver's seat here. Let me also say we had a donation in the chat, but I don't want to call any attention to it because that does look like a very sketchy website. Please don't pay any attention to that. Alice Baker, if you genuinely donate to the stream, we very much appreciate it, but that's a weird one for us. So please don't go to any sort of sites that are posted, even if they're from a donation. Anyways, Chris, you've got the stream here. I'll back out and give you the show.
All right. Thanks, Nick. Frank, you want to stick around? You guys were talking about gold earlier. I'm looking at some positions on gold to get started. So if you want to discuss that, I'm happy to.
I do, and I want to tell you about a couple options trades I'm in right now.
I like it. Okay, let's do. So here's what I was checking on really quickly. So we're at 437.86 on the Qs. I am checking on a couple of things. So I did a deep dive this weekend on diagonals, calendar spreads, and I want to talk about that a little bit more of an extension of what we discussed yesterday. I am looking for, so on Friday, which is non-farm payroll, I do have a 435. I have a chart alarm here on the Qs. So I have a couple of positions on the Qs right now to the downside. I can show you that. I can go individuals, or I think it's easy if I just go individual. So on the Qs, I have a 440 by 410. That's a debit spread. So I'm looking for $30 the downside. But as a way to lower the cost basis of my debit, I did do a 435 additional put. Right now that's negative because the delta's changed so much on this decline. We're trading at 437. I think there's still some wiggle room here. Again, it's a sell put. So this is a position that I'm looking to possibly roll out another week or so and down and hopefully do it for a net credit, because the idea is I'm trying to take that 440 debit. I did a I'll just type it in here before I just, blabber and talk
Yeah, I was
about it.
gonna ask because it's very hard to see the numbers on your
Oh, for
screen.
sure. Yeah, let me zoom in. I'm sorry. If I get that a lot with. So for me, this is similar. Like if you look at a Thinkorswim platform, the numbers are super small. Like I can see it on my giant, 24-inch monitor, but I get it. It's a little bit small.
Yeah,
So let me take the settings here, go to the view, and now the numbers should be a little bit bigger. So
yeah,
a 440 by 410. So let me type this out in this little black space. So I did a 328 expiration, 440. That's a long put by a 410. That's a sell put, and it was about an $8 debit. So what I did this week is I did a 3/8 expiration, 435 sell put to lower cost of net debit. So what I'm trying to do is chip away at that net debit. So instead of paying $8 for that $30 debit spread, and again, that's a wide area because my initial trade, we talked about this last week, I believe. I'm looking to see any correction. I want to take as much out of that long put as possible. And I'd be happy with that long put if it makes me, $7, $8 to $10 credit. I'm happy with that. The 435, depending on how violent the downside gets today, I could roll that out and try to roll it down and keep it out of the way. But my goal is if I can roll it out, I've got about 2 to 3 weeks to play with, and I can roll it down. I'm willing to do it for a small debit, but I try to keep it under $1. Otherwise, I'm just going to let the long put try to gain as much profit as possible in the near term. So to me, filling the Nvidia gap is really my goal on the QQQ. So I'll get that price point in just a moment. But anyway, I'm going out to the end of March. I did another trade out to the first part of April. I'm just looking at this window as we've had a good run to kick off this year. We've been melting up higher. I read something last night that the 16 of 18 weeks that I mentioned yesterday on the show, 16 of 18 weeks on the SPY or the S&P and the NASDAQ hasn't happened since it's either been a recession, the dot-com bubble, or like the 90s. It's been like these really weird run-ups where the market's a little bit out over its skis, as long in the tooth, as they say, and a correction I would say is very likely. So I heard you guys talking this morning about what would be the catalyst, and there's all sorts of reasons we could see a catalyst. The one thing when you guys talk about the Fed, I'm very surprised that the Fed has been able to pat itself on the back for being right as far as this soft landing, because typically the Fed is reactive and they're late and they're lagging. And so something like that in 2024 tends to tell me that I think we're going to break something. I think the bond market's going to snap, or gold's going to be this crazy rally, and something's going to break where the Fed overreacts to a rate cut or underreacts where they don't cut rates and they keep pausing. Something I think is going to just flip the market for maybe it's a brief window. But we look at the charts and I feel like something's going to have to snap. So it feels like we've had this melt up capitulation move. And I just think we need a little taste of reality here in the coming weeks. And so hopefully I'm positioned for
right.
that the right way. But anyway, I'll stop blabbing. Give me some of your option trades we can talk about.
Sure. It's nothing crazy. I knew Neo's earnings was today,
Ah, okay.
so
Getting
I
crazy.
had I sold a put. Believe it or not, I can actually sell puts now. Um,
Can you
I
do
just
spread
can't
yet?
do credit spreads.
What?
Um, yeah.
Dude, that's crazy. You
So
can do a naked put, but you can't do a credit spread. That's defined risk. That's so silly.
yep.
All right.
And
What'd you do?
so I got. Let me check WeBull. I had a sell put call at 30 or yeah 28 cents, and
What's the strike price?
expires. It's $5 strike price, expires on the 8th. So I wanted
Okay,
to
so
do
28 expiration,
a
$5
short,
sell put.
yeah, a
Okay.
short put that was close to expiration,
Uh-huh.
and I had a long call as well as at a $6 strike. Expires a month out, so not February, April 5th.
Okay.
Um,
April 5th expiration, $6 long call.
and that was a 41-cent average price. And currently it's at 31 cents. So I'm down 18% on it today, but my short put is up 79%. So I'm hovering in profit right now,
Yeah.
but yeah, that the call option is not moving anywhere today.
Okay.
So
Do I have this correct, Frank? If you look at my screen, so you have a 3/8 expiration. You sold the $5 put for 28 cents. Does that seem right?
a, a what? Say that
Did
again.
your put? Did you sell a $5 put and collect 28 cents credit on that?
Correct.
Okay. So that's out to this Friday, and then you went to the 4/5 expiration $6 long call for 41 cents. Yes.
Yes.
Okay. So you're at a net debit of 13 cents. Um, so the ideal situation, you have number one,
It's got to go
Neo.
up.
Yep, you want to say that Neo stays greater than $5 by Friday expiration, right? Because right now it's trading at 5.53. If we stay above that by Friday, then your sell put collects the full 28 cents. So that would be, if you do that, keep the 28 cents credit on the naked put, right? Two would be Neo rallies greater than $6 anytime in March. What do we need it to get to? We need it to get to $6.41.
641.
Yep,
Yeah.
or higher. And if we did that, then we have the long call gains in value. So this is just the breakdown of the trade. As long as price one stays above $5, you collect money this week on the put. If we see a rally out of here, and this is what we need to ask, is this stock capable from the low to the $6 zone? Let's get to 641 here. Is the stock capable of rallying 33%? That's a move of about $1.60. If I go into, let's go to Neo here. So if I go to NIO, go to trade, let's go out to that March 5th expiration. We just had earnings on it. The expected move I see on the upside about 94 cents. So from current price, 94 cents does gets us up to that like 650 zone. So it's very possible you could get yourself into profit. That call side might be a little tough to get to in the next 31 days. However, I mean, this stock is beat down enough. I mean, this is probably the first big positive blip of news that we've seen, right? Q4 jumped 6.5% on increase in vehicle sales deliveries. Problem on earnings is they missed on both. Like Neo is still not a profitable company overall.
Nope.
They have some revenue, but if it's not profitable, that might still be judged harshly by the market. So worst case scenario is, let's say you keep your money above the $5 put this week, you collected 28 cents. Your debit is essentially financed on the long call. So the most you can lose on this would be 13 cents.
Right.
So I think that's totally fair. And I'm assuming it was way. I mean, $6 would be cheaper than a $5 call. If I did a $5 call here, right now that $5 call is trading for 80 cents. So because you went, one or two strikes out of the money, right now that's trading for about 32 to 35 cents. You paid 41 for it, right? So that, and a lot of that was because of that harsh spike we saw to the downside right there. That harsh spike to the downside at 478 is what dipped the current trading cost of your long call. But overall, I like it. I would just set a chart alarm at 641. Right? Set a chart alarm at 5, set a chart alarm at 641, and that gives you, kind of the next step of your trade, which, what happens, Frank, if stock price dips back below 478 by Friday? What happens to your sell put,
So that means if it expires below that on Friday,
Mm-hmm.
I will be assigned at 5.
Correct.
But I will have collected the premium, so it's basically like owning it at 471, 472.
472. Yep.
So hopefully, if I do get assigned, I don't really want to own the shares.
Mm-hmm.
So if I get assigned at like say 5, I get assigned at 5, but price is at 478 or 475. I'm probably just going to close out.
Yeah.
And take that. But yeah, that's if that happens. Hopefully not. And I hope the call works out. But I initially bought the call a month out, then realized that if I could sell a put, there's potential of minimizing the loss there a little bit. But at the same time, I was like, this could also be a leveraged. This is a long play for sure.
Sure.
because I'm selling puts and buying calls. So hopefully it keeps going higher. Today it dipped to like 472
Right.
before coming back up. So that was a little concerning, but
Yeah. I'm seeing, so my price feed shows a 478 dip. If your break even's 472, there's two ways you can treat that. One is if you did get the assignment because it stayed below $5, your break even's 472, you could turn right around on Monday because you get assigned Friday over the weekend. Monday, you could turn around, maybe it's up to 475, 480, 4 whatever. You can close it out for a small gain. If you wanted to going into next week, so these are weekly expirations. If you went into, let's say that the stock did get assigned because it was under $5, but it's also in that window where it's not below your break even point. Here's a quick fix for next Friday. You
okay.
could do a 450 covered call. Now, again, don't do this until there's assignment, but if you wanted to do like a 450 or $4 covered call, you could see if that's enough to calculate your break even and actually get out of here with a small profit. So let's say, just hypothetical here, let's say that NEO, let's say that Friday price closes at $4.90 and Frank is assigned at $5 with a 28-cent credit on the put. So Frank's break even is $4.72. You can look at the 450 covered call or even the $4 covered call and likely collect, let's say it's trading for 490, you can probably collect 40 cents on the 450 call, or you could collect, let's say, 90 cents on the $4 call, and all that is just kind of intrinsic value. So what would be your break even if you did that? Let's say that you did
450.
Yeah, let's say you did the 450. So Frank likes the 450. I feel like I'm writing out a story problem here. Frank likes the 450 and does a 315 expiration 450 covered call. So that's a sell call. And again, you're selling that call against the shares that you own, but you collect another 40 cents. So the 40 cents minus the net 472. What's your
I could take it to 432.
Yes.
Would be my next break even.
Yep. And what would be, so if you get the stock then called away above 450, what's your net profit on that?
If it gets called away at 450,
right? Because that'd be, if your sell call is at 450 and the stock is above that, you're going to get the stock called away at 450, but you take your 472 net break even minus the credit you collected, which gives you break even of 432, like you said. And then 450 is, what's the difference? 450 minus the 432 is 18 cents.
Okay, so I can walk away with 18 cents credit overall.
Credit. Yep, net credit.
Cool.
And it'd be about the same if you did the 90 cent, right? It's like intrinsic value. You're going to probably make about 15 to 20 cents on the trade as a whole. So I think your ability to win on the trade is pretty high if there's assignment. I think the hard part right now would be to see that $6, like the $6 call appreciate enough to get into profit. But the nice thing is, because it's a long call, I mean, you could technically turn that into a debit spread if you want to lower the cost basis, but I don't think we need to worry about that right now because the strikes are so close together. But I'd say this is at least step one. Is we've got the sell put. I think the probability, since the earnings were decent, at least received decently by the market, stays above $5. There's no assignment. You collect your 28 cents. You finance most of that long call. If price rallies a 6+ and change, maybe the premium is there because you have some time left in the trade. That I think it'd be the expectation for me if I was in that trade with a $6 call. If it's trading for, you paid 41 cents for it. If somehow you're trading for 80 cents credit, that's 100% gain on that long call. So just set the expectations where, because you're only out, 30 days, I don't think you're going to, $8 or $10 on the stock price. I think your expected move is going to be about $1, right? So if we go from 550 to 650, that covers your break even. Maybe there's some time premium left in that trade, and that gets you, 30, 40 cents. That's a pretty good return on that call position. So I think that's a likely way it plays out.
And yeah, hopefully 2, but I had it a month out just so I could hopefully see that the change in like the way the call is priced at, but
Uh-huh.
it really has not moved at all today. It came down yesterday to 31 cents. Today it's
Yep.
at 34 cents, even with this move.
Yeah.
So I don't know how reliable I can be with this call play, but yeah, hopefully at least we expire out of the money or above my strike price so I can collect the premium because I think that's where I'm gonna get the most out of my trade, I think. Um, so yeah.
Yeah. I'm gonna set some chart alarms for you just so I can chat about it. So Frank's call break even, and we'll see what price does. So I don't think
Thank
it's a
you.
bad play. Earnings can be hit and miss. If I look at something here, let me see if I can find a little snowflake analysis on, let's go AT&T. And I might have to look to do a quick roll on my Qs, Frank, while we're in the session today. I mean, the Qs are dropping pretty hard. We're at 436. I've got a 435. That's going to be showing some, let me go individual accounts here. So if I move this down, go to my Q positions. So I have this guy that seems to be in the way. I'm going to look to roll this really quickly. If I go, let's do a quick roll. So how low could I roll this out and how much time could I go out? So if I did the 8 to the 11th, if I roll this, so right now this is a 38 cents credit to roll it to Monday. Could I roll it down? I could go break even for $1. I could roll this out further. Maybe I can change the date here. So strikes, expirations. Let me go more time. If I rolled it out a week, which would be the 15th. Now, let me see if I can roll this. This makes my job a lot easier. So if I rolled it out a week to the 433, rolled it out to the 432, 431, 430, I'm essentially not trying to lose on the roll. That's my idea here. So I can roll it down to the 431. I can roll it out to the 15th, and I don't if this is something you need me to slow down and just let me know.
I do have a question. I don't
Okay.
I forgot what you said what rolling was, and what are the consequences? Like, does it cost money to, or like, is there a fee or something
So
to
I that's what I'm determining right now. So what I'm looking at is my 435 right now is being threatened. So I'll show you. Let's go back to the initial position. So right now my 435 put that I did yesterday, it's down $200. So the reason why is because the price is dropping aggressively today. I mean, we had a close at 444 yesterday. We gapped lower and we pushed. I mean, from yesterday's close, we're down about $7 on the Qs today. So that's a big drop. And those deltas and premiums have changed so much that I'm down about $200. Now, here's the nice thing. I can roll this trade, and this is what I want you to pay attention to. So there's two things I have to do. If I roll this down in price, because a 435 put, if it goes below that, I don't want the assignment. I'm trying to give myself more room for my long put to be profitable. So I'm at a 440 long put. So just keep that in mind. So right now I'm making money. I'm making good money on the long put. So we're sitting about, $4 to $5 a premium. I'm up some profit on that one. I can show you what that looks like here as well. So just on the long put right here, I'm up $400 on that long put. So I could close the trade right now and just say, I'm good. I'll just take the $200 profit. But I want to see if we come back and fill that NVIDIA gap. So if I go back to the Qs right here, okay, we are getting into that gap. Should pop up here in my chart in just a moment. Should. There it is. So my NVIDIA gap is that it? Or is this it? I think this is the NVIDIA gap right here at 430. Yeah. So I've got room to the downside. SPYs haven't touched the gap yet either. Oh yeah. So we're not even close to that NVIDIA gap yet. So that's a good thing for me as far as getting into additional downside pressure. And I'd like to see if we can at least test or touch. So we've got weekly, monthly pivot there around 432. We've got the NVIDIA gap around 430. So what I'm looking at doing here, Frank, is if I go to my trade position, my long put is in profit. That's step one. So what I want to do is I want to avoid getting the 435. I don't need price to go below that and get assigned, obviously. So here's what I'm, to your question you're asking, what about the roll? So if I do this, if I have the 435 put and I roll it to, let's say 434 for next week, can you see that I can collect a credit here? So it shows $1.28 credit to $1.30 credit. So
Okay.
I can close out. Here's what a roll does. It's going to close out the 435. It's going to reestablish a 434, and I'm going to collect the net $1.30 on that. Now, on my broker platform, I'm still closing the 435 for a loss. I'm upside down about $200 today. Okay. If I close that down, it's going to show me a $200 loss. But if I hold this one to expiration, it's actually making $330 on the other established call, which gives me a net credit of $1.30, right? You see the difference there?
Okay.
So that's my $1.30. Now, what I need to do here is I need to roll this. I don't want to just roll it down one strike. I want to keep this out of the way. So what I'm looking at is if I roll one strike at a time, I'm trying to roll this for a positive credit so it doesn't cost me anything to roll this. So if I roll it to the 432, I can still collect 60 cents. I roll it to the 431, I can still collect 28 cents. I can roll it down to 430 and essentially pay a 1 cent debit, but give myself $5 of breathing room where it's effectively like a free roll. It's essentially I'm paying $200 on the loss, but I'm collecting another $200 on a fresh roll, and that way it's break even. So ideally, here's what I can do. I've got some room until the 20. Let's see here. I don't know. Let me go out to this strike here. So I'll go back to this strike and increase the expiration time. If I went to the 18th, which is a Monday, how much lower could I roll this baby? Let's find out. 429 for a credit, 428 for a debit. So I think I'll do this. I'll do like a March 18th expiration, roll it down by about $6, make this a small credit between 5 and 10 cents. See if I can roll this for a 10-cent credit. Let's find out. Now it's at 15 cents. I'm going to try to get the mid for this. 14 cents credit. Let me send this out. So review and send. That's not filling. So I'm going to try to play around with the numbers here and just kind of finesse it down for a couple of cents.
So this is a sell?
This is I'm rolling this strike. So I'll explain it once I get this thing filled. Hopefully it fills, but it might fill at the bid price, which is going to be about 4 cents, which is better than nothing. Doesn't cost me anything to roll, and it gets it out of the way. 11 cents, 10 cents. Come on, baby, fill me something. It shows the mid at 6, so it's going to be tough for me to grab it. Hang on a second. We're selling off pretty aggressively. So
do your limit prices usually go instantly, or is this?
They're usually pretty instant, but because I'm doing it, so it's going to be like between the bid and the mid is what I'm trying to get filled at, but it might just tell me take the. There we go. I got filled at 7 cents. Okay. So I'm going to make that adjustment right there. And I'm going to copy this over because I have similar trades in all my other accounts as well. So this one, let me just double check positions on the Qs. So I have my 439 put. I've got the 435. I need to do a similar trade on this roll and still grab about, 3, 4, 5 cents. Let me see if I can get this one. This account is 9732. Review and send. 9732. 9732. 9732. Okay, so I'm trying to roll this. We're looking at about a 6 to 8 cents credit. I'm trying to get the mid price again, review and send. Maybe I can get filled for slightly better. This is a 429. So the March 8th, 435. I should have that trade. Yeah, I have that trade. All right, maybe I just need to roll this again. So I'll just do this individually. So quick roll. Yeah, this is it. So March 8th to the March 18th, roll this for a small credit if I can. Right account, let me just double check that. 9732 should be good. Account is set to closing only, and this order has an opening leg. Closing only? What you talking about? That shouldn't be right. I'm trying to roll this. Hang on a second. So I'm trying to buy to close the current sell put. I'm trying to sell to open the current. I mean, it's a freaking roll, dude. What the heck? Let me see if this will work. All right. I don't know if I'm missing like a broker permission here, but that's really strange. That should not be an issue. I just took the trade yesterday. So I don't want to take. I'll come back and do this on my own, but that's weird. So I'll get rid of this trade right now. Let me go into another account, do the same thing, check my position. So this is what happens when I have a bunch of accounts that I've got to manage. 439 by 410. That's my debit spread. The 435 is what I'm looking to roll. So I'm going to try to do a quick roll right here. Move this one in expiration out to the 18th, which is a Monday, and roll this down to the 429 because that was a small credit. Yeah, let me see if I can get some credit here. So try to roll this one. And this account's 2111. Mid is 14. Maybe I can get 10 cents out of it. See if I get 10 cents. Filled at 10 cents. No problem there. Okay, that's good. And then one more account to manage. And I'm going to come back to that other one. That was a weird snag. But this one, 435 by 445. This one's up. So net profit, I'm up $250 on this account with a higher strike price, but I'm still going to roll this one down. I want to try to make as much money on this little decline as I can see. So let me look at a quick roll. And same thing. So again, this is, hope everyone doesn't mind watching. It's like real traders, real platforms, making some trades. That's what has to happen sometimes. So I will do the expiration out to the 18th, and the strike, I'm going to move it to that 429 so I can get a small credit for it. Try to get 10 cents. I get 7 or 8 cents. I'm okay with that too. I'm trying to just essentially not lose on the roll. So that trade, that account is 2634. 2634, filled at 11 cents. Okay. So I'm good on managing those really quickly. And then I'm going to come back to this account for whatever reason. I don't know why it was doing that. It was being a turd. But here are my cues. 439 by 410 by 435. I need to roll this leg all by itself. So quick roll and double check this one here. Move this out to the 18th and move this down to the 429. So this one should give me some credit here.
Do you want a higher credit? Like the higher that number is that what you're trying to get?
I'm trying to get any credit right now because I'm rolling it out like $6. I'm trying to just not pay for the roll. That's what I'm trying to do. So I'm going out in time, which allows me to go out in time and lower my price because I'm trying to stay out of the way. So let me see if I can just roll this one really quickly. We're trading around 13, 14 cents credit. It's like, this has to give me something pretty good. Let me check here. This should be good, man. Positions, sell put at 435, trying to roll that. This should not be an issue here. 9732, set to closing only. I don't know why it's set to closing only. That's so dumb. Closing only, check failed. Bro. All right, I need to hang on a second. I'm going to send out. Go ahead, Frank. I want to get some conversation going. I need to get a client going because this is not doing what I want. And
sure.
That yeah.
I will, like, if we do have to, do this at some other time, it's fine.
No, we're good. Dude, I've got all day. It's fine. I'll get it taken care of. I can play around with the rolls, but account is
I'm
set.
going to be honest, I was not prepared today either.
Close
my
only.
Battery is now at 15%. So
okay, let's go until it dies. Let's go until it dies, dude.
Let's. I have a few more minutes for sure. So, okay. What do you want to talk about though? What's on your mind other than rolling the Qs and gold? What were some things you want to look at?
Yeah, let's talk GLD for a second. I'll come back to that. So I need to make a note here. So that's 9732. I need to be able to roll that Q position. All right. So I'll take care of that today, and I can play around with it. Like if we have a little bit of a bounce to the upside, my position's not really threatened. I mean, heck, we've already gone from 444 to 436. I mean, that's a $6 or $7 move on the day. That's pretty steep. I doubt we're coming back to fill the gap, so I might look at some futures trades this morning. But let's go to GLD for a second. So gold just continues to rip, and this has been a wild and crazy move. And I think you and Nick were talking about it this morning. I mean, not a lot of people were in this trade. I don't think a lot of people were in this trade. So I think the real position coming out of gold right now is, and I said this on Monday's session, as long as the daily or the weekly candle this week This is GLD versus XAU USD. As long as my GLD positions on the week closes above this resistance at 194, I'm looking to establish a 190 long position and I'm going to do a diagonal spread like we talked about yesterday. So I will show you what I did here. If you want to take a look at some positions. So here is, let's go GLD, and I'm just going to go one account. There we go. So I have a bull put spread right here. So the 186 by 185, that's probably not going to be threatened anytime soon. Essentially, that's full profit as long as price stays above 186, which is right in here. Probability of that is pretty high. So that's likely going to be a profitable trade. And then what I did yesterday was I'm looking out a little bit further. I went out to May, which is 73 days out. I bought a 190 call, and against that 190 call, I'm selling the 200 call, right? So that's this Friday. Now, here's what that means. This is where we can break it down and have another example. So if I do, my current price is a 517 expiration. This is on GLD. So let me type this out here. And if I lose you, Frank, then based on your battery, but we'll get this example out there, and then, like I said, go until I don't see your face anymore.
Or you'll lose me conceptually.
Yeah. I'm always missing you, day to day. After all the one-on-ones, I mean, we've built this very intimate relationship.
I was meaning like you'll explain something and it'll lose me.
Oh, I see what you're saying. No, I mean, well, that too, but okay.
But yes, also the
we've grown close over the past weeks.
for sure.
The 517, 190 long call. Okay, so basically it's this. I am trying to participate in GLD's rally, right? So I'm long on that call. I paid for that debit yesterday. Let me check my alert service here. So EOD, SPYs. Okay, so I paid $9.45 for that. $9.45. Now, what I did for this Friday is I sold a call against it for 50 cents. But like we talked about yesterday, if I do that week to week to week to week, I'm going to collect, about 50 cents a week. And hopefully that sets my cost over the next 70 days. 70 days divided by 7 is about 10 weeks, right?
Yeah. Wait, so this was yesterday, you're saying?
I took this trade yesterday.
Okay, for 945 debit.
Yes. So 945 debit. But here's what I'm looking at. If I can safely collect 50 cents a week for the next 10 weeks, that's $5 of credit that I could collect over those 70 days. I could effectively turn this 945 debit into a 445 debit. And if GLD is trading at 197, I'm still $3 in the money because a 190 minus, if price goes nowhere on GLD, I can still collect that premium, lower the cost base, and still make $2 or $3 net credit. If GLD takes off and gets above 200, 201, 202, then I'm just going to keep staying out of the money with like 10 to 15 delta sell calls and just try to collect premium every single week. So This is a diagonal like we talked about yesterday.
Right.
So against this long call, I created it's a diagonal because I'm selling a call against it, and this is a 200 sell call for 50 cents. Right? So I have a 945 net debit for a 71-day long call. And then against that, I have a 50 cent net credit with a $4, $5 or $5-day sell call. So my cost right now is already $9, or it's $8.95, right? $8.95 is my net debit. Now, if I get it called away, what's the strike price? So a 190 is my long call, and a 200 is my sell call. So Frank, do the math for me.
So if you get called away,
yep. How much do I make on the trade? If price goes above $200 and I do nothing, how much do I make on the trade?
Well, wouldn't you lose on the sell call for getting called away?
But do the math. I paid $9.45. I collected another 50 cents. My net debit is $8.95. What's the difference between my 190 strike and my 200 strike?
Just 10.
10. So if I have $10 of net profit minus the net debit, right? Minus the $8.95 net debit, what do I make?
You make 105.
105. So do I make money on the trade if I do nothing? If it gets above $200 this week, I don't have to do anything. I can still make about 10% of my position.
Okay.
Am I happy with that? No, I want to try to hold this thing. And if GLD is going to blast off and go crazy, or if it breaks up like it's done and goes nowhere, I'm just going to keep selling calls against that longer call, selling calls against longer call, try to lower the cost basis to see if anywhere in the next 2 to 3 months, GLD continues to go higher, gold continues to go higher. I'm trying to lower the cost basis for me to make more money on the upside. If I do nothing, I still make $100 like this week. By Friday, I can still make $100, which is 10%. That's fine. If it goes higher, 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 I'm just going to try to keep my sell calls out of the way. I want to give it as
Okay.
much as possible, but I can still make money on the trade.
So you would keep doing 5-day sell calls until
Try.
you're.
Yep. I'm going to try to go every week.
Would you try to ride this this long call all the way out till expiration?
If I can, because if I can lower my cost basis enough, let's say this, let's say that let's say by April, the end of April, okay, so we're not quite to expiration yet, but by the end of April, let's say that GLD is trading for like $215. Well, $215 minus my long call is an intrinsic value or real value of $25. If I'm up $25 and I've lowered my cost basis by $3, $4, $5 of credit, I'm at a break even around 195, let's say, and I close out at 215. I just made $20 on a $5 position. I just made 300% on my stock or on my long call. So it's a big gain. It's a nice chunk of profit. So if GLD goes higher, I'm just trying to stay out of the way and not interfere with it. But if it breaks out this week and all of a sudden we pause for a week or so, I can probably just sell some more premium, lower my cost basis, give myself the bigger window to still be long. And if GLD snaps back, let's say it comes back to 190. I mean, what does that look like? If we pull back to 190, we're almost creating a move that kind of looks bad, right? If we pull back to 190, all of a sudden this is going to not look as promising because this resistance would not be holding as support. This area that is now open space for the bulls would be kind of they call it the turtle head, where it just pokes out above and doesn't really follow through, right? So if we don't break this resistance and stay up here, then I'm less likely to enjoy the trade and probably end up taking a small loss on it. But if I'm still lowering my cost basis, I can still take a much smaller loss and work the cost basis down because I've given myself the window to May on my long option.
Well, if this happens, at what point would you switch your strategy around instead of continuing to sell calls? If price keeps going up, what if it breaks that level? Now you're, I guess, at a small loss. Would you take that small loss, or would you work with it just in the other direction, like say sell puts, or maybe even do a credit spread? Would that?
Well, are you saying if it came back down here?
Yeah.
If it came back down there, I'd probably do bear call spreads up here and just try to, again, now here's what I've done. I'm committed to a 9, or I'm committed right now to an 895 debit, right? That's what I've committed to. So if I can lower the cost basis week to week to week, I'm going to continue to do that. If all of a sudden the price looks like it's not cooperating, I can do credit spreads up here. I'm not just going to flip around and say like, oh, I'm going to sell, I'm going to do puts now. No, I'm just going to lower the cost basis here. And maybe I can lower this cost basis to, $6, $5, $4, do some credit spreads up here, take on some different positions. And let's say my net loss, instead of being an $9 debit, I lower it to like $5. I can stomach a $5 loss and be totally wrong, as opposed to eating away at a 950 debit originally.
Okay.
Right. So I'm just going to manage the position. If it turns into a loser, I'll manage the loser effectively and try to reduce the size of the loss. If it turns into a winner, I'm just going to try to manage it to the best of my ability and see if this wants to go up directionally. If it doesn't, and this is what I can see happening. Let's say we have a solid weekly close here. All right. And then price pauses. Well, as long as we stay above this 192, 190 handle, I like this as kind of a big bull flag, and then look to see how long it takes for this momentum to continue higher. If I'm right on this one, I'm just trying to stay out of the way. I want to make as much money on GLD as I can. And hopefully I'm right within the window where this pre-summer push and trending season and getting into May, allows me to do so. But I'm not going to chase this thing.
How irresponsible would it be to say you're committed to this 895 debit, but say gold just absolutely tanks?
Okay.
Or at least it's about to. You can tell. let's just say theoretically, how
Okay.
irresponsible would it be to start buying puts on top of the debit you already have in a long call?
Yeah, it's not irresponsible. It would just be the way that I look at it is like if I'm wrong, I'm trying to make it right. If I'm wrong and I feel like this is more probability to the downside, then absolutely I could do the same type of thing. I could buy a long put to calculate my break even, do the same type of thing, do a debit spread or try to lower my cost basis, and net maybe the net result is this. Maybe if I did like a $9 call, right? And on the downside here, I do a $9 debit or on a $9 put. Let's say that I make money here. So let's say I win on this one, I lose on this one. Well, if I walk away with $0, which is better, making $0 or losing $900? Making zero. Oh, Frank's gone. So my answer, it's a rhetorical question, I guess, since I'm talking to myself now. If I had a $9 call and I gain $9 on a put just to wash the trade, making $0 is better than losing all on one trade. So another way, if I was going to chase it, it would just be I'd break even on the position. So I was wrong, right? I was wrong one way. I was right the other way. I washed the trade. My break even level, my current or my balance is the same. So it's kind of no harm, no foul. It's a wasted trade and a wasted commission, but it's certainly better than taking a chunk out of the account. So that's my thoughts, at least on that. So Frank, we can reconvene on that topic. But anyway, so I'm trying to ride this a little bit longer. For me to wrap up here for the day, I'll jump into the EOD trading room at 11 o'clock in my my trading room. If anybody's interested, by the way, if you wanted to, extend these sessions, join my trading room, you're more than welcome to do so. I run a Forex trading room through the week. I run a stocks and options trading room for the week. I have that in my Discord channel. I know the team posts that in there. I'll do one expiration free invite if you'd like to join my Discord. For anybody watching that has not, let me do this here. So I'll do a non-expiration invite, and I'll post this in the chat. So this is my Discord if you haven't joined. My Discord. And if you jump into my Discord channel, you can go into the thread for education. There's trading room access. I do a trial for $27. And speaking of a trial, I know that the Edge Finder is doing a trial. They don't do free trials, but I know that you can still use my promo code. I think it's promo code Pulver, and you can get a trial of the Edge Finder, get a test drive of it before you commit to the full purchase for the lifetime of the software. That's fantastic. So, I've got trading room access here. I'll show you really quickly before I bounce. If you come into my Discord, go into education, I have trial on my stocks and options trading room, trial my Forex trading room for $27. All of these classes are Forex classes, except for Delta Trader is stocks and options. Equities on Demand is my trading room that I'm live 5 days a week. Everything else is Forex trading, indicators, full classes, video, strategy guides, robots on a lot of these. I think these all have EAs and robots to them in MT4. And then we have Smart Scripts and Smart Trader. And then I have a video series on market structure, mapping, patterns, things like that. So again, just all on my Discord. So check it out. I can put all that stuff in one place. So hope that helps. Anyway, I need to run to a live session. I also need to get some client permission on that roll because I want to make sure that my queues I can roll out to the 429 strike out to the 18th and roll that for free and get myself out of the way for another couple of days. And interesting decline on the day. We already had an open. I should have just done a long put, but I didn't. That would have been chasing the market a little bit. So I will let you go for today. New comments I'm catching here. Okay, I just was stuck on that silly little. Can I spell the? Oh yeah, sure. I can spell the promo code. Absolutely. Promo code is my last name, Pulver. So if you want to do the Edge Finder trial or purchase, promo code Pulver. There you go. So you can get your hands on a test drive or buy the software for a one-time purchase and lifetime access, which I think is unbelievable. There you go. Thanks, Nick. Okay, so that's it. I'll cut it off there. I went long yesterday. If Frank had a battery, we'd still be talking. But I've got I don't know. When's Frank's birthday? Let's get him a battery, or let's get him a plug. Anyway, all right. I'll let you go for today, everybody. Nick, Chandler, and the team. Thanks a lot for having me, and I'll see you all soon. Thanks. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.